Welcome back to the quarterly call. All content is for informational purposes and is not investment advice. Please consult with an investment professional. All right, today we are jumping right into the core of Q3 2025 for really one of the big foundational customer platforms out there.
Yeah, one that's really shaping how a lot of businesses operate.
Exactly. And while the financials looked, pretty stable, even robust, this quarter felt different. It was almost entirely defined by this huge, almost overwhelming acceleration towards AI.
That's absolutely the right way to frame it. It wasn't just business as usual. It felt more like a strategy reset.
Yeah, like a replatforming announcement sort of hidden inside the numbers.
Definitely. So our mission today needs to be pretty focused. We've got to get past the headline numbers.
Right.
First, let's really distill the core financial health, understand that base stability, what actually gave them the leeway to make this big pivot.
Okay, makes sense.
Second, we need to unpack those three enduring growth drivers, the ones that keep delivering consistently.
The playbook.
The playbook, exactly. And third, and this is where we really need to spend our time, we have to analyze this aggressive AI strategy. Everything from, the new agents and their adoption, the LLM connectors, even this fundamental shift in their whole marketing philosophy.
It's a lot to cover.
It is, because this AI strategy, it's not just another product line. It feels like it defines their entire future growth path now.
I completely agree. That stability provided the foundation, the capital, and maybe the mandate for this big transformation. But yeah, let's start with the hard numbers. Where do we begin?
Okay, let's kick off with that foundational health check. Section 1, the Q3 results and guidance. So looking at Q3 2025, financially, this quarter really seemed to deliver what the market wanted, right? Disciplined growth, expanding profitability.
Yeah, it hit the marks. Total revenue came in at $810 million.
And that reflects what, about 18.4% growth year over year in constant currency? Which is pretty impressive scale.
It really is. And if you break that down, the subscription revenue piece, that actually grew even faster, clocked in at 21% year over year. Okay.
But what I find really compelling, strategically speaking, is how they manage that growth alongside efficiency gains.
Yeah.
They showed really solid operating leverage.
Right. Pushing the operating margin up to 20%. That feels significant.
Very significant. It's up 1 point year over year, but also 3 points just from the previous quarter.
Okay, so why is that sequential jump 3 points? Why is that so important when they're also in the middle of this huge AI investment cycle?
Well, it signals maturity, right, and control. Usually when a company's throwing this much effort into rapid, transformative R&D, launching hundreds of AI features...
You'd expect margins to compress, yeah. R&D spending goes up.
Exactly. So hitting 20% margin while funding this massive AI shift, it really proves their underlying cost structure. The G&A, sales efficiency, it's hitting a critical point of scale.
Interesting.
It suggests they're basically funding future growth internally through discipline, not just, raising more cash. That operational rigor, that's a key sign of long-term health.
That definitely sets a powerful foundation. And the forward-looking indicators, like calculated billings, they also look strong.
Yeah, billings came in ahead of expectations to $804 million. That's 19% growth year over year in constant currency.
So stable demand, efficient execution, clear story there. But that stability also comes from sheer scale, right? And that scale is increasingly global.
Absolutely. The total customer count, it's now nearly 279,000.
Wow.
They added 10,900 net new customers just in Q3. And while, everyone focuses on the big enterprise deals, that volume at the base level is still crucial for the pipeline long term, reinforces the whole network effect.
And the international piece is growing fast.
Incredibly fast. International revenue grew 20% in constant currency. And critically, it now makes up 49% of total revenue.
Almost 50-50. That's basically full geographic diversification.
Which is huge for insulating them from, say, regional economic bumps. If North America slows down, maybe Europe or APAC picks up the slack, it validates the whole global platform strategy. Okay,
let's talk about a metric that gets a lot of scrutiny. Average subscription revenue per customer, ASRPC, came in at $11,600. Why should we focus on the fact it was only up, 1 point year over year in constant currency? Seems modest.
Okay, so that 1 point increase, even though it looks modest, is actually a really critical inflection point we need to unpack.
How so?
Well, for several quarters before this, ASRPC was basically flat.
Right.
And the reason was they were successfully adding tons of new, smaller customers, the ones starting on those lower price starter tiers. That volume kind of diluted the average, even while total revenue was growing nicely.
Okay. Makes sense.
So the fact that ASRPC is now ticking up even just slightly, it means the other stuff, the pricing changes they made, the move up market, getting customers to adopt multiple hubs, that's finally starting to generate enough expansion revenue to outweigh the dilution from all those new smaller customers.
Got it. So the monetization of the existing base is finally pulling the average up, counteracting the necessary friction of that land and expand model. That is a strong signal.
It really is. It suggests that the push towards pro and enterprise adoption, which we'll get into, is actually feeding back positively into the financials. It's kind of the first hard proof point that the long-term plan is working efficiently.
Okay. So strong Q3 delivery. But management also signaled confidence for the rest of 2025 by raising guidance. What's the read-through there?
Yeah, raising full-year guidance, especially in this macro environment where lots of companies are being cautious, it speaks volumes. It shows real conviction in their growth levers, especially AI.
So what are the numbers for Q4?
For Q4, they're expecting revenue between $828 and $830 million. That's still a robust 16% growth in constant currency.
And the full year?
Full year 2025 revenue guidance got bumped up to $3.113 billion to $3.115 billion. That cements 18% constant currency growth for the whole year.
So not just a slate beat and raise. This is them saying, we see sustained demand, probably fueled by these new AI products.
Exactly. And their capital allocation strategy kind of reinforces that conviction. They generated $147 million in free cash flow in Q3 alone. That's 18% of revenue.
Pretty healthy.
And crucially, they bought back a lot of stock. Repurchased 780,000 shares for $375 million.
That's a significant buyback.
Sure.
What does that continued aggression on share repurchases tell us about how they view their own stock versus internal investment needs?
Well, a couple of things, I think. First, it shows financial maturity, right? They can fund the massive R&D for AI and return capital. That's impressive.
Okay.
Second, it suggests management probably thinks their stock is still undervalued compared to its cash generation potential and, this huge innovation cycle they're in. They're effectively voting with their dollars, saying their own stock is the best investment right now.
Strong signal. Okay, so we've got this stable, global, increasingly profitable base. The question then becomes, what's the actual growth mechanism? What's driving customer acquisition and expansion?
Right. So if you look under the hood, they really operate with this remarkably consistent playbook. It powers that continuous compounding growth. We touched on them, but it's these three enduring drivers: platform consolidation, multi-hub adoption, and that upmarket momentum.
And these aren't new strategies, but you're saying AI is accelerating their impact.
Radically accelerating them, yeah.
Okay, let's break down platform consolidation first. Historically, why did customers consolidate? It was about ditching point solutions, right?
Yeah. Traditionally, the argument was mostly financial and operational. First, cutting total cost of ownership, TCO. Fewer contracts, less integration hassle, simpler billing.
Makes sense.
And second, getting that unified view of the customer. If sales and marketing use different tools, they're blind to what the other is doing. One platform means everyone sees the same picture, much more efficient.
But the commentary suggests there's a new, really urgent driver for consolidation now, specifically because of AI.
Yeah.
Why is this becoming just as powerful as TCO?
Oh, this is where it gets really interesting strategically. The absolute need for unified data to fuel AI is quickly becoming, as they put it, an equal part driver.
Equal to cost savings and the unified view.
Yeah. Think about it. AI models, agents. They're garbage in, garbage out. If your customer data is scattered everywhere, marketing automation here, CRM there, service desk somewhere else, payments siloed.
You can't train an effective AI agent.
Exactly. How can a prospecting agent write a truly personalized email if it can't see the customer's last support ticket or the webinar they just attended or the content they downloaded?
Right, it would just be superficial personalization.
Totally. So customers are realizing, hey, to actually use AI for high conversion GTM, I need all my customer context, all the interaction data in one place. They want one platform, one clear AI roadmap. It makes the platform incredibly sticky and future-proof.
That shift consolidation driven by AI necessity, not just cost, that fundamentally elevates the platform's value proposition, doesn't it? Makes it almost an AI operating system.
Precisely. And you can see that platform-first strategy working when you look at the multi-hub adoption numbers. Customers aren't just replacing old tools, they're buying more of the stack.
Okay, let's hit those beta points. How do we know multi-hub adoption is succeeding?
The numbers are pretty undeniable, especially if you look at their valuable Pro Plus customer base, measured by ARR. Two key stats jumped out.
Go on.
First, 43% of that Pro Plus base now subscribes to 3 core hubs. That's up 4 points year over year.
Okay, nearly half.
And second, even more telling, 39% subscribe to 4 or more hubs. That's up 6 points year over year.
Wow. So combined, was that 82% of their high-value ARR is using 3 or more hubs? That's huge ecosystem buy-in.
It's clear proof that the strategy is working.
What are the specific cross-hub benefits driving that? Is it just the unified data?
It's the unified data amplified by AI. For example, Marketing Hub and Sales Hub together. Marketing can segment based on sales activity like a deal stage change. Add Service Hub. Service sees the content someone viewed before they submitted a ticket, allowing proactive support.
So each new hub makes the others exponentially more valuable.
Exactly. That interlocking value is the real competitive moat.
And as the platform gets smarter and more connected, it naturally pulls in larger customers who need that level of integration. Let's talk about the upmarket momentum.
Yeah, we've seen really steady, impressive growth there. Deals over $5,000 in monthly recurring revenue, MRR, they grew a remarkable 35% year over year.
That reflects years of building out enterprise-grade features, right? Permissions, reporting, scale.
Absolutely. Things that were maybe weaknesses historically are now strengths.
Okay, but let's make it tangible. Give us an example. Why would a big company rip out a legacy system now that's hugely disruptive?
The QS example they shared is perfect. Global education services company, over 1,000 employees. They were on a 20-year-old legacy CRM.
20 years. Replacing that is a massive undertaking.
Huge. But they did it, and they specifically cited the platform's AI strategy, the approach to agents, and just the sheer pace of innovation as the reasons.
So it wasn't about saving money, it was an AI-first decision.
Exactly. They realized waiting longer meant falling behind in leveraging this new era of customer intelligence. That's a powerful statement.
It really is. And it perfectly tees up the next section, confirming that even the core growth drivers are now totally intertwined with the AI agenda. Does focusing upmarket risk alienating their traditional SMB core, though?
That's always the strategic tightrope, right? But the argument is that the features built for enterprise, the AI agents, better data governance, security, they actually benefit everyone.
Democratizing enterprise features.
Exactly. Build it for QS, but the small business owner gets the benefit too. The goal is to make the whole platform stronger, defending the core while capturing the high-value deals. It's meant to be a virtuous circle.
Okay, the stage is perfectly set. We get the financial stability, the growth playbook. Let's dive straight into the AI innovation that really defined Q3.
Right. Q3 was really all about their annual I Am Bound conference. And it felt less like a marketing event this year and more like a massive product launch platform specifically for their AI pipeline.
The scale alone tells you something. 13,000 people there in person, but what, 550,000 online?
500,000 online. That just underscores how much the market, the ecosystem was waiting for these updates. The urgency is palpable.
And they certainly delivered on volume. Over 200 new updates and products launched.
Yeah, an incredible velocity. It really validates the idea that their AI strategy isn't just tacked on, it's deeply embedded in R&D. They're positioning themselves as the solution for companies wanting to win with AI without needing, a dozen different generative AI tools.
Okay, so let's recap their AI mission. They laid it out pretty clearly in 3 parts.
Yeah, it's logical. 3 layers. 1, embedded AI, that's the base. Weaving AI right into the everyday tools, Marketing Hub, Sales Hub, Content Hub, making them smarter without users needing to learn anything new.
Just instant productivity boost.
Exactly. 2, autonomous agents. This is the more complex layer. Building these specialized agents to handle multi-step, complex tasks on their own. Things like prospecting research or resolving support tickets.
Taking work off the GTM team's plates.
Right. And 3, the Breeze Assistant and connectors. This is the intelligence layer. Using Breeze and the LLM connections to turn all that customer context data into actionable insights, making the AI personalized and relevant.
Okay, the agent strategy feels like the biggest leap, moving from simple AI assistance to actual workflow automation. Let's get into the adoption numbers and performance metrics for these agents.
Yeah, the traction here is really significant, moving beyond early adopters pretty fast.
Start with the customer agent. What does it do and how's it doing?
So the customer agent handles routine support tickets. It's now being used by over 6,200 customers. That's up 48% just from last quarter.
48% growth in a quarter. Wow. And performance.
Average resolution rate is in the 60s, so 60-something%.
Why is 60% impressive? Sounds like it's still missing a lot.
Because it means 60% of incoming support volume is handled without a human touching it. That frees up service reps for the really complex, high-value stuff. And they noted high retention, which means customers using it are seeing real, sustained ROI.
Okay, fair point. What stops it getting higher than 60%? Just issue complexity.
Yeah, exactly. Agents are great for defined questions, simple workflows like password resets or billing queries. But if it needs nuanced judgment or accessing external systems or just real human empathy, the agent is designed to hand it off smoothly. The goal isn't 100% automation, it's maximum efficiency plus high customer satisfaction. 60% seems to hit that balance.
Got it. Okay, then the prospecting agent. Sales-focused? The growth here looked even more explosive.
Astonishing growth rate here. This agent helps with researching accounts, scaling outreach, activated by 6,400 customers now. That's up 94% from last quarter.
94%. Doubled in a quarter.
And maybe more importantly, customers have used it to engage over 1 million prospects already.
1 million. That scale suggests sales teams are really relying on this for pipeline generation now, solving a big pain point.
Definitely feels like it's becoming core workflow. And even the newest one, the data agent, is showing promise.
Right, the data agent. What's its role again?
It helps customers pull their scattered data together, basically making the data ready for AI. Despite being brand new, it's already activated by 1,700 customers.
Which just confirms what we said earlier. Customers know unified data is the key prerequisite for AI success.
Absolutely. And beyond these specialized agents, there's the universal layer, the Breeze assistant. That's seeing heavy use too.
Yeah, Breeze is meant for everyone on the GTM team right inside the CRM. Weekly active usage is up 56% in the last 6 months.
56% growth in usage. What are people using it for?
Sales teams summarizing long customer histories before a call. Marketing managers instantly finding insights, like which campaigns are lagging or which segments are engaging most. It's moving past being a cool feature to being an essential prep and analysis tool. Daily efficiency driver.
Okay, adoption is strong, but the real proof is tangible business outcomes, right? Let's look at the ROI customers are seeing.
This is where it gets really compelling, especially for justifying consolidation. In the Marketing Hub, customers using the embedded AI features. What are they seeing?
Better performance across the board. Higher click-through rates, sure, but critically, over 50% higher lead conversion rate.
50% higher lead conversion. That's massive.
Yeah.
Is that sustainable, though? Or just novelty effect?
Well, management argues it's fundamental. The AI isn't just writing slightly better copy, it's using that unified data to instantly personalize landing pages, subject lines, calls to action based on that specific lead's history.
Dynamic personalization at scale.
Exactly. That used to take huge engineering effort. Now it's automated. That fundamentally changes the economics of lead gen.
Okay, Marketing Hub results are huge. But the Sales Hub outcome sounds almost transformative, especially for winning those big legacy displacements.
It really is. Customers using AI features in the Sales Hub are winning almost 10% more deals.
10% higher win rate, just by turning on AI features.
Yeah. They highlighted this was a result they previously thought impossible just with Sales Hub alone before AI.
Okay, unpack that mechanism quickly. How does AI actually increase win rate by 10% in a tough sales environment?
It seems to boil down to perfect preparation and timing delivered automatically. The AI uses the unified data plus external intent signals to basically coach the rep.
Like what?
Suggesting the best time for a follow-up, highlighting which competitor mention is most relevant, pointing to the right case study for that specific prospect's pain points. It's this concept of guided selling, which we can touch on more later.
So the rep goes into every interaction with the perfect context and strategy.
That's the idea. Reduces friction, boosts confidence, and apparently boosts win rates by nearly 10%. That kind of number justifies the whole platform investment right there.
Absolutely. Okay, so this success with their own embedded AI and agents leads naturally to the ecosystem question. How do they play with the giant external large language models everyone's using?
Right, and the strategy here seems, well, quite smart in its simplicity. Don't try to beat the big LLMs. Instead, make your platform the essential layer that feeds them context and lets users act on their suggestions.
The LLM connector approach, making the platform the first CRM to connect directly with the big three, ChatGPT, Claude, Gemini.
Exactly. And the market reaction shows how much demand there was for this. The ChatGPT Connector, fastest growing app they've had in 5 years, activated by over 47,000 customers already.
47,000. And what about the stat that 55% of those users are Pro Plus customers? What's the significance there?
That's crucial. It shows their most sophisticated, highest spending customers immediately saw the value. They get that LLMs are powerful, but kind of useless for their business without access to their proprietary customer data.
The platform provides the secure, structured data to make the LLM output relevant.
Precisely. Turns generic creativity into actionable GTM strategy. And the Cloud Connector is picking up steam too, over 6,000 customers using that one.
Okay, what are some high-value use cases? How are people actually using these connections?
Well, you see senior folks using them for strategic prep, like a director before a pipeline review asking the LLM, based on our data in the platform, what's the biggest risk to our Q4 forecast? And getting an almost instant data-backed answer.
That's powerful. And there was that specific anecdote, the basement group example, showing the full loop. Can you walk us through that again?
Yeah, that one perfectly illustrates the value chain. So the basement group, they used the prompt library via the LM connector, asked it something like, analyze our historical campaign data in the platform, find the highest converting persona.
Okay, so the LLM crunches the platform data.
Right, identifies the best target persona. But then this is the key part. They immediately built and launched a tailored nurture campaign for that specific persona right there inside the platform.
Insight and action in one place. The result,
Campaign open rates jumped from 8% to 40%.
8 to 40%. Okay. LLM provides insight, platform executes, delivers measurable ROI. Got it.
Which leads directly into their core argument for why the platform remains sticky, even essential, in the age of AI. They laid out 3 reasons why the platform and LLMs are better together.
Yeah, let's spend a moment on this because it really underpins their whole strategic position.
Okay, the 3 points really explain why they don't fear generalized AI but actually see it as a catalyst. 1, context. This is the big one. LLMs generate ideas, text, code. Fine. But the platform provides the context, every past interaction, ticket, sales call, abandoned cart, to make those ideas accurate, relevant, and actually actionable for GTM teams.
Without platform context, the LLM is just guessing.
Exactly.
Yeah.
With it, it's synthesizing your business history. 2, action. LLMs tell you what to do. Send an email to this segment. But the platform is where you do it. Build the workflow, launch the campaign, run the reports, execute growth initiatives in a structured, auditable way.
The platform is the execution engine.
Right. And 3, multiplayer. LLMs are mostly single-player tools. One person, one output. The platform is built for teams. It knows rules, permissions, preferences. It ensures sales, marketing, service all work together off the same data.
You can't run a 1,000-person GTM team from a ChatGPT window.
Pretty much. You need the structured, collaborative environment. So that whole thesis platform houses the AI, applies intelligence, context, action. Collaboratively, it makes the platform indispensable, not just sticky.
It becomes the AI operating system.
And that strategic integration is critical because, as they highlighted, the whole marketing landscape is undergoing a massive structural shift right now, thanks to AI search overviews.
Right. Talk more about that structural problem facing digital marketers.
It's basically an existential threat to classic SEO. Search traffic, organic traffic, is declining globally. Why? Because AI overviews and search results are giving users direct answers.
So people get the info they need without clicking through the website.
Exactly, which fundamentally devalues content created only to capture that organic search traffic. The traditional funnel is breaking.
Okay, so the platform needs to offer customers a new playbook, a way to adapt. What's the solution they're proposing?
It's the Loop playbook, which they launched dramatically at INBO. It's guidance on combining human creativity with AI efficiency, but crucially, it emphasizes channel diversification.
Moving beyond just SEO.
Way beyond. Pushing customers into own channels, YouTube, podcasts, really good email newsletters, community building places where the brand controls the relationship directly, not Google.
And the market reaction to this Loop playbook sounds like it hit a nerve.
Huge reaction. The Loop content got 270 million impressions, over 100,000 views of the playbook itself. That massive engagement just confirms how urgently marketers feel this problem. They know they need to change tactics, and the platform is positioning itself as the guide.
Part of that new strategy involves adapting to the new search reality through something they're calling answer engine optimization, or AEO.
Right. AEO is basically the next frontier for visibility. If LLMs are giving the answers, you need your brand, your product, your expertise featured in those AI answers.
It's a whole new channel to optimize for.
Exactly. And it's nascent, but getting in early is key, so they launched tools to help, like the AEO grader.
And 70,000 customers have already used that grader. That's incredibly fast uptake for a totally new concept. What does it actually do?
It's like a diagnostic. It looks at your existing content, your data structure, and tells you how visible you likely are in AI environments.
Hmm.
Are you structured so LLMs can easily cite you? Is your product data accessible? Are you seen as authoritative? That huge adoption tells you customers immediately recognize AEO as the next battleground.
And to really cement their lead in AEO, they made an acquisition, Xfunnel. What does Xfunnel bring to the table?
This feels like a really smart, forward-looking move. Xfunnel is basically a platform to track and improve how brands actually appear in LLM answers.
So while the platform could advise on AEO strategy,
Xfunnel provides the competitive intelligence. It shows you when and how often your brand gets mentioned, tracks your competitors' presence in AI answers, and gives granular advice on improving your visibility. It's the measurement and tracking layer for this new channel.
the analytics for AEO. Makes sense.
Precisely. And they plan to build it natively into the platform, giving customers a fully integrated AEO toolkit. It signals they see AEO as absolutely critical and intend to own that space.
That's a really impressive strategic sequence. Spot the disruption, provide the playbook, deliver the tools, acquire the measurement capability. Okay, let's pivot now. We've covered the core growth and the AI innovation. Let's talk about the emerging levers for accelerating monetization and growth next year.
Right, so this section is really about how they plan to harvest the value from all that AI investment. Management highlighted two main mechanisms, creating what they called a long runway for growth: core seats and credits.
Okay, let's start with core seats. That's about driving usage deeper into customer organizations, right?
Well,
What's the key update there?
So the core seat gives edit access to the smart CRM, that unified record. The big shift at Ironbound was making that core seat way more valuable, almost essential, by embedding core AI and data capabilities right into it.
Making it indispensable for basically every GTM employee.
That's the vision. Anyone who touches customer data or needs insights needs a core seat.
Okay, unpack those embedded capabilities again. Breeze Assistant, Smart Starts, enrichment data. How do these make the core seat essential?
Well, think about it. Breeze Assistant Access, instant insights, summaries. Every employee needs that for quick prep. Baking it in makes research effortless.
Okay.
Smart Starts. These are AI-driven workflow suggestions. A sales rep clicks a record, gets an AI prompt for the next best action, accelerates productivity right away.
Got it.
And enrichment data. This is key. The core seat now includes access to high-quality data enrichment, keeping that unified record fresh with external firmographic or intent data. So the data fueling the AI is always current.
So insight, workflow, and data quality all bundled into the core seat. Turns it from basic access into a real productivity tool.
Exactly. Clear path to expanding seats within existing customers. And then there's credits, the universal usage-based pricing system. This feels like a fundamental shift in capturing value from high-volume AI.
Right now, credits cover what? Agent actions and data hub syncs.
Yeah, those high-value, high-volume activities. But the long-term plan is clearly to extend credits across the entire platform, all automation, all high-compute stuff.
Tying revenue directly to customer value realization. They use more AI, generate more value, platform captures more revenue via credits.
That's the model. As consumption grows, revenue grows.
But usage-based pricing can be tricky. Customers can get spooked by unpredictable bills, especially if budgets are tight. How are they approaching the rollout? Sounds like a careful framework.
Very deliberate. It's a four-step framework designed to avoid backlash by ensuring customers see value before they pay for usage.
What are the steps?
1. Focus on activation. Get people trying the agents and syncs, often with free initial credits. 2. Drive repeat usage. Make the features part of the daily workflow indispensable. 3. Ensure consistent customer value. Prove the ROI, like that 10% win rate lift.
And only then.
4. Then monetize. Charge for consumption beyond the included free amounts. Ensures the value is clear when the bill comes.
Smart. Prevent sticker shock. What are the early signs? Where are credits being consumed most right now?
The customer agent is the big one currently. Because it delivers such clear value handling, 60% of volume customers are apparently showing positive signs of using more than their included credits. The second area is data hub syncs, where frequent large data transfers consume credits. Still early days, but those are the focus areas.
And it's crucial to remember, right, that credits are only one way they're monetizing AI.
Absolutely vital point. Credits are the long-term usage lever.
Right.
But the embedded AI, the stuff boosting win rates and conversion rates, that's already driving revenue today through higher attach rates for hubs, more seat upgrades, faster expansion deals. It's a multi-pronged monetization strategy. Credits just capture the volume automation piece.
Okay, let's shift to the big question analysts always ask. the path back to accelerating revenue growth, getting back towards or above 20%. Stability is good. Acceleration is better. Where does management see that coming from?
Yeah, this whole conversation hinges on leading versus lagging indicators. Total revenue growth is a lagging metric, right? Because the install base is so massive, it takes time for changes to show up there.
So the key leading indicator is
Net new ARR, NNAR. That tells you about the health of the new business engine, new logos, expansion deals before the huge existing base smooths everything out.
and what's the NNAR trend telling us?
Okay, so NNAR bottomed out in the first half of 2023, reflecting the macro headwinds back then. But it's steadily increased through 2024. And critically, NNAR growth has been consistently above the constant currency revenue growth rate since the second half of 2024, right through the first half of 2025.
Right. That's the inflection point. NARR growing faster than total revenue means the current engine is accelerating, but it just takes time repeating quarters of that strength for the overall revenue number to catch up and inflect upwards.
Exactly. Management seems confident this sustained NNIR outperformance points to faster, durable growth ahead. The underlying engine is strong, and the AI products are now adding fuel.
And that confidence also shows up in their net revenue retention, NRR, expectations. NRR was flat sequentially in Q3 at 103%, but they're expecting a step up in Q4. That sounds pretty bullish for one quarter.
Yeah, step up implies something significant is happening in Q4. It suggests a jump that will pull the full year 2025 NRR up a couple of points compared to 2024. That means churn is likely reducing and expansion is accelerating, converging powerfully.
Okay, let's really nail down the drivers for that projected NRR step up. This is core to the investment case.
There seem to be four key things coming together. One, stable customer dollar retention. The base is sticky, customers aren't leaving at higher rates.
Okay.
Two, stabilized downgrades. After maybe some right sizing last year, fewer customers are downgrading now. Revenue leakage is minimized.
You'd sign 3.
Three, continued strong seat upgrades. This goes back to core seats and AI ROI. Those tangible results, 10% higher win rates, 50% better conversion, are pushing customers to buy more seats and upgrade hubs.
Makes sense.
And four, the 2024 pricing change tailwinds. This is the guaranteed lift. Those pricing changes from 2024 are still rolling through the install base. There's still another 50% of the base that hasn't hit their renewal under the new pricing yet. That happens in 2026.
So that pricing lever provides a multi-year structural tailwind for NRR, completely independent of new product success.
Exactly. It's a guaranteed NRR booster into 2026, regardless of the macro. Provides a really strong safety net for the growth story.
That's crucial context. So combine that structural price lift with accelerating AI-driven expansion. The NRR step-up looks very credible.
And the path to sustained NRR improvement into 2026 seems pretty clear.
Okay, one last piece. Making sure the sales team is ready. What are they doing operationally to ensure they can capture this growth? Sales capacity and productivity.
Two main things. First, they're still doing targeted hiring for sales capacity where needed, specific regions, specific segments, so they don't miss opportunities due to coverage gaps.
Standard blocking and tackling.
Right. But second, and maybe more interesting, they're aggressively using their own AI tools internally to boost productivity, eating their own dog food.
That guided selling concept.
Exactly. Reps using Breeze, prospecting agents, enrichment data right within their own CRM, using intent data for better prioritization, automated meeting prep, faster follow-ups, getting real-time competitive insights during deals.
So using their own tech to make each rep more effective.
Yeah. It proves the platform's value internally, plus it allows them to scale revenue potentially faster than headcount, improving sales leverage over time.
Okay, let's try and wrap this all up. Quite a quarter, quite a strategic shift. What are the key takeaways for the listener? Hashtag tag outro. So Q3 2025. On the surface, operational stability, solid financials, good margin control, that nice little inflection in ASRPC.
Yep, the foundation looks strong.
But underneath, it was all about transformation.
Yeah.
Driven by those core levers, consolidation, upmarket now supercharged by the absolute necessity of AI unification.
Yeah, the huge takeaway is that profound AI shift. We saw the agents hit mass adoption, delivering really tangible results, that 10% win rate jump, 50% higher lead conversion. Those are game changers.
And the strategic response to the search disruption, the Loop playbook, AEO,
Yep.
backed by the Xfunnel acquisition, felt very proactive, very aggressive.
Definitely. The whole platform strategy now seems centered on being that indispensable context and action layer for AI.
And the emerging levers, core seats, embedding more value, credit starting to monetize usage. Those look like smart long-term plays, coupled with strong NNARR and that guaranteed pricing tailwind boosting NRR.
It really sets the stage for potential acceleration into 2026. But I think the really critical strategic piece established this quarter is that deep integration with the big LLMs, ChatGPT, Claude, Gemini, combining their proprietary agents and data with that external intelligence.
Makes the platform incredibly sticky.
Stickier than ever before. So maybe the final thought for the listener is this. Considering how fast the agents are being adopted, the shift to AEO, the push into usage-based monetization, how quickly does this race to become the AI operating system for GTM teams actually solidify? And what does that mean for the concentration of customer data and therefore value within these unified platforms? Something to really ponder.
Great point to end on. Thank you so much for tuning into the quarterly call. For more episodes, please remember to rate and follow our show. Until next time, stay curious and stay informed.